What's up, apes? Welcome back to the Daily Peels video stream of the day. You know, they say an apple a day keeps the doctor away, but yesterday the story was an apple equal weight keeps the losses away. But unfortunately, we missed the memo on that one over here at the WSO Alpha portfolio. We did underperform for the day. We were down about 11 basis points for the session, while the NASDAQ and the S&P were both up between 20 and 30 basis points for the session. I believe the S&P led the way up about 27 basis points because we are underweight Apple. It is one of our largest positions, but Jesus Christ, it's like 7% of the index. I think it's about 5% for us. So some of our losses to the downside pulled us down a little bit more because we didn't have that hot air balloon of an Apple overweight position keeping us afloat. So you win some, you lose some. We got a lot more to talk about here today. We're going to kick things off talking about the 𝗟𝗂𝗚𝗏 solstice, the macro eclipse, whatever you want to call it. It's one of those magical days in financial markets where we're getting both an inflation report and a Federal Reserve meeting at the exact same time. So at 8:30 a.m., we're going to get the latest CPI report for the month of May. And then between 2:30 and 3:30 p.m., the Federal Reserve is going to be hosting its press conference. They're going to release what they're doing to rates at 2 p.m. Spoiler alert, it's absolutely nothing. Everybody's going to be paying attention to the summary of economic projections. So we'll break that all down in just a quick second. And then, of course, we will finish things up speculating wildly about what the next Nvidia could possibly be. So make sure to stay tuned for all of that. My name is David. It is currently 8:03 p.m. I know I look extra homeless today. I have been up since 3:45 this morning. I was going to say not to brag, but in absolutely no way at all is that a brag. So let's just go ahead and get right into it. Shout out to the Boston Celtics, up 2-0 heading into Game 3. I was going to say tomorrow, but later today. Game 3 is in Dallas, so shout out to the boys in green. All right, anyway, let's move on to some of the banana bits for the session. So we all know that Paramount, or really Paramount's parent company, National Amusements, owned by Shari Redstone, has been in talks to sell Paramount and all of National Amusement potentially for quite a while. Their number one bidder was Skydance Media, and we just found out today that the talks have officially ceased between those two parties. So it's probably going to be that consortium led by Apollo, or maybe even some other investors that haven't come into play yet. But RIP to Shari Redstone and her possibility of getting a fat premium over shareholders. So moving on to Oracle's earnings reports that just dropped here this afternoon, our responsibility today is completely ignore the earnings and make your intelligence artificial. So not artificial intelligence, but just completely remove all intelligence from the equation and pretend like it's a good thing because they signed a few deals with OpenAI and Google, and they said AI a bunch of times during the earnings report. So obviously the stock is up after hours. Meanwhile, Affirm shares were up during the day because they actually struck an actually good deal with Apple to basically embed their buy now, pay later tech in Apple Pay. So it's going to get a lot more volume there. I'm sure they're hoping for a lot more loan defaults so that they can actually make money and create that ever so sweet shareholder value. Nothing more American than making shareholder value or making money for yourself based on the mistakes, faults, financial calamities of other people. I mean, we absolutely love to see it. Speaking of which, the refi wall, this is basically the idea that S&P 500 companies are going to have to refinance at the highest interest rates they've seen in more than 2, maybe even 3 decades for a lot of these companies as well. That is starting to approach according to Morgan Stanley. So definitely check out that stuff to stay in the loop. But okay, let's go ahead and on to the 𝗟𝗂𝗚𝗏 eclipse. So what we're talking about here is, of course, the release of both the Fed's latest, well, really all three. It's the release of the May inflation report. It's the FOMC's update to interest rates. They're not going to do anything. It's not going to be a cut or a hike. But we're also going to get a summary of economic projections. So it's those three things: inflation, interest rates, and summary of economic projections. Let's go ahead and talk about how it's all going right now. So the most important thing to check out, at least, to get us kind of in the right mindset here, because this is all going to be released by the end of the day today. But what's important to understand, because there is going to be a reaction regardless of what happens. So in order to understand that reaction when it happens later today, we want to understand the context going into the session. So if we take a look at this chart right here, this is the future interest rate futures market implied probabilities of a rate cut or a series of rate cuts happening by a certain date. Now, this particular chart that I've chosen to show today is for the September 18th, 2024 meeting of the FOMC. So what you're seeing right here in these blue bars is the probabilities of the Fed funds target range being within the respective range that you see down here on the x-axis. It's a lot easier to see in the piece. Go check that out. But nonetheless, this is the first one this year in which the consensus expectation is for there to be cuts in existence. Now, this one in particular, this is only vying for 125 basis point cut in September. Absolutely nobody expects a cut today. It's not going to happen. It would be the shock of the century. if the Fed was to come out and cut the Fed funds rate here today. Maybe they'll do it in July. It's going to depend a lot on the inflation data that we get, but the tough part is we're going to get the latest inflation data about 7 hours prior to this meeting, and based on the inner workings of the US government, they're probably not even going to realize that it was released by the time the 𝗟𝗂𝗚𝗏 is on stage. So everybody and their mother is expecting for interest rates to not get cut until September. There's 99% odds of no cut today and 91% odds of no cut in July. So the only tough thing to consider there, however, is recent economic data has changed quite a lot. So in order to understand the context around what the Fed was thinking before this economic data, we want to go back to the latest summary of economic projections, so before tomorrow. And specifically, we want to look at the dot plot. And that's exactly what you're seeing right here. Each one of these tiny little blue dots that I can't really tell if you can see, but each one of those tiny little blue dots is basically one of the voting members of the FOMC and their expectations for interest rates at the end of each respective period that you see on the x-axis. For 2024, back in March, pretty much everybody expected interest rates to end the year in the range of 4.5 to 4.75%. Now, that's somewhat still kind of what people are imagining. Basically, that would imply at least 3 25 basis point cuts. Right now, futures markets are basically implying 1 to 2 25 basis point cuts. Might not sound like a big deal, but it is a big deal in terms of how the market is viewing the Fed's sentiment of the market. So it's what the market thinks that the Fed thinks of the market. That's basically what we're kind of seeing right here in these two overlays, basically considering what the Fed has most recently stated and what the market is now pricing in. So thankfully, we're going to get an update to this here today, and that's what all eyes are going to be on, and quite a lot of it is going to be dependent on this chart right here. So this is where we're showing the Fed's expectations for inflation over the next couple of years, and specifically, we want to be focused on the year 2024, which is this bar right here. So as of March, pretty much everybody expected inflation to end the year in the upper 2% or so range. Now, the tough part to that, because we are currently in the upper 2% range, is that inflation has actually been rising recently. So we hit a low in January and February of this year. Is at 2.5% for the headline PCE, notably not CPI. So we are going to get the CPI here today. The Fed doesn't give a damn. They care about PCE. Now, CPI can provide a halfway decent proxy for the PCE, but 𝗟𝗂𝗚𝗏, like I said, he's probably not even going to know that it was released this morning. And I'm sure most of you are probably watching this after it was released. So go ahead and check that out and you'll know more than I do already. So nonetheless, this is what the Fed expected the path of inflation to be, at least in March. So seeing this update, seeing how recent data, especially rising inflation that we've seen since February, is going to impact this outlook is going to be a huge part of the report as well. That's basically what you want to keep your eyes on. Now, like I said, there's not going to be any cuts, any hikes, any change whatsoever at this meeting here, but the path forward clearly has to be a cut. And I mean, I think we can say that confidently, even with rising inflation, because growth is starting to slow. We're also seeing unemployment tick back up to 4% for the first time since January of 2022. We just saw that at the end of last week. Go ahead and check out the piece from Monday as well if you don't remember that. But still, it's definitely putting 𝗟𝗂𝗚𝗏 in a tough situation here, so it's going to be very interesting to see how he plays this and how he handles those ever so loving press conference reporters here tomorrow. But that about does it for that story. We'll have all the answers to our questions from this part, at least by the end of the day today. But for most of what we're about to talk about, we have absolutely no answers whatsoever. So, especially for this first thing that we're going to talk about, I mean, fucking GameStop. Anybody who spent hundreds of thousands of dollars on a finance degree should be slitting their wrists over this right here and the fact that this wasn't taught in class. Where was Memes 101? I mean, Keith Gill should probably be a professor at NYU at this point or something, because GameStop was up yet again here today. It actually ripped higher by about, let's go ahead and double check, about 22.7% for the session. Once again, there was absolutely no reason whatsoever, but Keith Gill, he did rip memes all day long on X. So apparently that fucking means that the stock price is going to go up. This guy, it drives me absolutely insane. The former financial advisor in me is screaming, because if you go back to this guy's Reddit account and check all of his YOLO updates, on July 6th, he had over $530 million in GameStop and in the options that were there. He could have closed out all the positions, taken $500 million, and nobody in his family would have ever had to work again. He didn't do that. Hopefully his wife has divorced him already, because he lost $350 million in 4 days on this position alone. So, I mean, Jesus Christ, people get divorced over like sleeping on the wrong side of the bed, I'm sure. And this guy lost $350 million. I really hope it all works out for them in the end, because I can't imagine what is going to happen to his reputation if it doesn't. But still, it could get absolutely eviscerated. His options position is set to expire in 9 days from today, or from when you'll be watching this. 10 days from me currently sitting here right now. So we'll see what happens. I don't even know what to say about GameStop anymore. It's getting so hard to write about. Moving on down into Apple. Apple, once again, all is right in the world because this company is the second largest stock in the world once again. It has overtaken Nvidia as of the end of the session. Apple hit an all-time high. They were up over 7% for the session. Absolutely ridiculous because analysts, we know they got slower reading comprehension than the average person. So it took them a little while to understand exactly what the releases were at the Worldwide Developers Conference. They decided on Monday that it was pretty disgusting, but on Tuesday, it was fantastic. So the stock was up a ton. Good for them, back to being number 2 to Microsoft. Moving on down into the what's rotten names. So we found out on Monday that Elliott Management has picked yet another activist battle with another soon-to-be victim. And in this case, that soon-to-be victim is Southwest Airlines. They've really already been victimized here because shareholders are clearly siding with Elliott as the stock absolutely tanked for the session. So all in all, it was down 5.6% for the day. Investors are clearly siding with Elliott because essentially all that's happened since then is Southwest came out and kind of defended their own plan. The CEO said he doesn't have any plans of going anywhere, but Elliott is about to turn into Maximilian Robespierre and just cut that guy's head off. So we'll see what happens. He's the real soon-to-be victim in all of this, quite honestly. Anyway, moving on down into our final stock mover of the day, we have Hertz Global Holdings, or in other words, Hertz Rent-A-Car. Now, they were also down 5.61% for the day, so about 1 basis point less than what we saw in the move from Southwest. They're both going to say 5.6%, which might be a first in Daily Peel history that we have two stocks that move the exact same in the same direction in the same edition. So welcome to history here, the first time in Daily Peel history. Anyway, Hertz, this fucking company. I actually had a rental car recently because I just got back from the hellish ordeal of touring houses in the Massachusetts area. So definitely don't recommend it. But while we were there, we rented a car so that we could drive around and I wouldn't have to annoy and disappoint my parents even further than I already do by borrowing their cars all for the entire week, basically. I mean, they have real jobs that they actually have to go to. And although I wouldn't know a thing about that, apparently that means that I can't take their cars. Anyway, so I'm getting this rental from Hertz. I show up to the rental place. It's like fucking midnight when I landed in the hellscape of Massachusetts. And I walk up to the desk. What do they have for me? A neon orange Kia Soul. I literally could not have imagined a worse car to be driving around with, something to get... I couldn't have gotten bullied for any other car more than I got bullied for this Kia Soul. Unfortunately, I did have to take it to a few... like my friends' houses and shit, and god damn it, I don't think I'm ever going to hear the end of it at this point. All right, I've wasted quite a lot of time ranting on that right now, but that is all to say that I understand why the stock is down. I woke up this morning wanting to short the fuck out of that thing, but it was 3:45 a.m. and I couldn't do it because the market was closed. Shares fell a ton, 5.6% or so, because there's a little bit of trouble going on with Hertz and their investor base, or specifically their investor base in convertible notes. So in a lot of these convertible offerings and warrants and other derivatives like that, basically there are certain covenants that drive payouts that kind of force the company to make direct payments to the holders of those securities. One of the more common ones that you see is a change in control event. And this basically means a recapitalization event. So much has changed with the equity and debt stack of the company that it no longer looks the same as when those notes were originally issued. So the buyers deserve some kind of compensation for that. At least that's the theory here. So about 11% of Hertz's investor base feels as though they got snubbed and they are owed a payment and they are suing like no tomorrow. It's about 11% of the total investor base because the company's done $3.4 billion in buybacks and has issued $2.2 billion in new debt since going bankrupt. So, makes sense that they'd be a little bit upset. The payout they're looking for is $188 million. So obviously that hurts quite a bit. All right. Now, let's go ahead into our thought banana. We are talking about the next Nvidia, or potentially the next Nvidias. None of this, please do not construe any of this as financial advice. I am a brainless idiot. Do not take advice from a website whose currency is bananas and monkey shits. Do not construe any of this as financial advice whatsoever. We're just speculating wildly. This is not even for informational purposes. This is for entertainment purposes only. Shout out to the SEC if you're watching this. Anyway, obviously, Nvidia has ran up quite a bit recently, and one thing that I found out was why the company is named Nvidia. So apparently, the word Nvidia, I-N 𝗏𝗏𝗍𝗍 means envy in Latin. And I mean, the stock share price has become more envious than Pete Davidson's relationship history at this point. So it's one of those names that just makes way too much sense, given all the envy that's created. But the reason it starts with the NV is allegedly for New Vision. Now, I've heard other things, some nerdier acronyms, but that's the story we're going to go with today because we want the new vision of what's going to ride the AI wave next. So if you look at Goldman Sachs' prime brokerage report, which Bloomberg reported on, I didn't actually get my hands on, but they basically said that, quote, fund managers net sold U.S. technology stocks for the third straight week. And they're talking about last week, of course. Most of the selling was concentrated in semiconductor and semiconductor equipment names. They were kind of the laggard of the industry, whereas software names were the gainer of the industry. So that to me is kind of suggesting that hedge funds are starting to shift their attraction to the AI trade from the hardware to the software makers. So if we start to think about what could potentially be an AI software firm that's going to outperform the rest of the market, like what qualities does that have? Keep in mind, this is more speculative than what Bill Hwang did at Archegos, so please don't take this as financial advice whatsoever, but this is kind of what I'm thinking. Let me know where I'm wrong. I would think it would be a large but not incredibly enormous market cap company. Like, we're not talking the Mag 7 here. Something with vast repositories of unique data, something like ideally diverse sources of data, multiple modalities, so text, video, audio, whatever other modalities there could possibly be, the capability to actually deploy proprietary artificial intelligence system that are an add-on to their current offerings, or at least would be easy for current customers to switch to and kind of pay that premium for. And of course, valuable intellectual property, because that always just makes things better because it's that exclusivity. So the first names that come to my mind that kind of check off all of those boxes are companies like Salesforce, Crowdstrike, Veeva Systems, maybe even Disney because of that IP. And because, I mean, they have Disney Plus, they should be able to, you know, like what if they can make like a Mickey Mouse doll that had an LLM in it or something? I bet every kid from here to Timbuktu would be buying that thing. So who knows? Our questions now are, what are the next companies to ride the AI waves? Are private markets the best way to do it? What else should we be thinking about at this stage? That about does it. And considering that we're talking about speculation here today, we wanted to end with a quote from the greatest speculator of them all, Mr. Jesse Livermore. He once famously said, "The sucker has always tried to get something for nothing. And the appeal in all booms is always frankly to the gambling instinct aroused by cupidity and spurred by pervasive prosperity. People who look for easy money invariably pay the privilege of proving conclusively that it cannot be found on this sordid earth." What a way with words. The guy can trade and write. Who can do it all like that? Definitely not anybody that I am aware of. So he's one of a kind. He's not really the kind of guy that's replaceable, the greatest trader to ever do it. We could really use his help over here at WSO Alpha. Like I said, guys, that about does it here for today. Thank you once again for tuning in here. It is now 8:20 p.m. I am going to go to bed after I shave my face so I don't look quite as homeless here tomorrow. Shout out to all you apes. Thanks again. Happy investing, happy trading, and bye now.